Okay, let us see what is given in the problem. Here, this type of adjustments are here. That is calls in arrears and calls in advance. That you can better understand here when we pass the journal entry. Just to go through what is given in the problem. Bharat Company Limited registered with an authorized capital of rupees 10 lakhs divided into 10,000 shares of rupees 100 each. This is the information with regard to the maximum amount of capital which a company can collect by issuing the shares. But here company has not issued all the shares. This is the maximum amount of capital. Authorized capital information is given in the problem. Okay, but here how many shares were issued by the company? Next sentence says company has issued 4,000 shares of rupees 100 each. Only 4,000 shares out of 10,000 shares were issued by the company at rupees 100 per share. But payable at rupees 20 on application. These are the installments. 20 on allotment. Next one is rupees 20 on first call and rupees 30 on second call and rupees 10 on third and final call. How many installments are there in this? You see 1, 2, 3, 4, 5 installments are there. In 5 installments, company is collecting rupees 100 from the shareholders. Here applications are issued for 5,000 shares, of which applications of 1,000 shares were rejected by the company. Company's plan was to issue only 4,000 shares, but applications have come for 5,000 shares. Therefore, the board of directors, they have rejected the applications of 1,000 shares. What is the meaning of this? Whatever application money has been already collected by the company on these excess applications should be returned. Okay, next one is all the call money was received, but not the final call on 40 shares. See, when the company asked the shareholders to pay the final call money, that is rupees 10 per share, but the call money had not come on 40 shares. That is the meaning. Your company asked the shareholders to pay rupees 10 per share, but all the shareholders paid the amount, but some of the shareholders holding 40 shares have not paid the final call money. One of the shareholders holding 20 shares paid final call money in advance when the second call was made. Here company asked to pay the second call money, but what the shareholder has done, he has sent even the final call money along with the second call money. It means here the amount is paid in advance, but here on 40 shares, the shares call money was not collected. That is why this is the example of calls in arrears and this is the example of calls in advance. We have to pass the journal entries. Okay, we will pass entries. Try to understand here how to pass journal entries in the books of company. You have already studied how to pass the entries. Very simple thing is there. Okay, fine. What is the first journal entry? Whenever application money is collected, we pass the journal entry as bank account is to be debited. Bank account is to be debited to share application account. To share application account. How much amount was collected by the company? Just you see, company issued 4,000 shares. Here all the shares were subscribed for, assume. Next, rupees 20 on application was collected. Rupees 20 on how many shares? On 4,000 shares. Therefore, 4,000 shares into rupees 20, it comes to how much? Rupees 80,000. This 80,000 is to be shown here as application money. Rupees 80,000. Okay. Rupees 80,000 is to be taken. Now you read the second paragraph. Applications received for 5,000 shares, of which applications of 1,000 shares were rejected. It means here company has received application money on 5,000 shares, not on 4,000 shares. That is why what is to be done now? On 5,000 shares, whatever application money has come, that is to be shown here. How much it comes? Rupees 1 lakh. Instead of rupees 80,000, how much amount has been collected by the company? Company has collected rupees 1 lakh. That is why here what is to be done? Bank account is to be debited with the amount of rupees 1 lakh. That you have to understand. But company's expectation was how much? Only rupees 80,000. But company collected how much? Rupees 1 lakh. Why? Because here excess applications have come. Because of that reason, 20,000 extra money has been collected by the company. Okay, fine. What narration do you write here? Being share application money, on how many shares? On 5,000 shares collected at rupees 20 per share. Okay, at rupees 20 per share. Now, when the application money is returned to the shareholders to whom the shares are not allotted, what is to be done here? Along with the letter of regret, company will return the application money, right? For that, reverse entry we pass. Share application account is to be debited. Share application account is to be debited. Here, see, company has received cash, but here company is returning cash or paying the cash to whom? To the applicants whose applications are rejected. That is why here reverse entry is to be passed to bank account. On how many shares? 1,000 shares. 1,000 shares application money comes to rupees how much? 20,000. This 20,000 is to be returned now. 20,000 and 20,000. See, out of 1 lakh, 20,000 is returned now. See, here bank account is debited with the amount of rupees 1 lakh. Here bank account is credited with the amount of rupees 20,000. It means 20,000 excess money is returned by the company to the shareholders. Now, how much money is left with the company? Only rupees 80,000. That is why here what narration do you write? Being application money on rejected applications returned. You can also mention how many what you call shares application money was returned. That can also be mentioned in the narration. Next, third entry is when we transfer share application money to share capital account, what journal entry we pass? Share application account is to be debited. Actual amount is how much rupees? 80,000, because only 4,000 shares company wanted to sell. Therefore, on 4,000 shares at rupees 20 per share, it comes to rupees 80,000. That is transferred to share capital account. Share capital account. Rupees how much? Rupees 80,000. Being share application money transferred to share capital account. Very simple thing. Next one is fourth entry with regard to the allotment. Here we have to assume that all the shares were allotted, because actually company had collected applications for 5,000 shares, means demand was there for the shares. Excess applications company had collected, in that 1,000 shares application money was returned by the company. And now allotment money collected on 4,000 shares comes to rupees again how much? 80,000, because rupees 20 per share is the allotment money. Very simple thing. You write whenever the allotment money is collected, bank account is to be debited. Again 80,000 you get. Next one is to share allotment account. Rupees 80,000. Here you write being share allotment money received. Share allotment money received on how many shares? 4,000 shares at rupees 20 per share. That you can write in the narration. Next one is you transfer this one to share capital account. That time, what journal entry we pass? Share allotment account is to be debited, or this is also called as due entry, rupees 80,000 to share capital account. To share capital account, rupees 80,000. You can write the narration being share allotment money due or being share allotment money transferred to share capital account. This is the fifth journal entry. Next, what is the sixth journal entry? Sixth is with regard to first call. Just you check, adjustment is not there with regard to the first call. Okay, fine. Here also the same amount is there. When first call money was received, what journal entry do you pass? Bank account is to be debited again rupees 80,000 to share first call account. Share first call account, rupees how much? 80,000. You write the narration being share first call money received on 4,000 shares at rupees 20 per share. Next one is when this amount is transferred to share capital account, share first call account is to be debited. Share first call account is debited to share capital account. To share capital account, amount is rupees 80,000 and 80,000. Here you can write the narration being share first call money due or share first call money transferred to share capital account. This is with regard to what? Up to first call. But in second and final call, adjustments are there that we have to keep in mind. Okay, next to come to the second call. We'll continue. Eighth journal entry. Eighth entry I'm going to pass. Very simple thing is there. Practice is very important, that you have to keep in mind. Without practice, you can't learn accounting. Okay, eighth entry with regard to second call. Here, with regard to second call, one information is given in the problem. Just you see here, one of the shareholders, last sentence you read, one of the shareholders holding 20 shares paid final call money in advance when the second call was made. It means, just you see here, one fellow is holding 20 shares, but he has paid in advance even the final call money. Final call money is how much? Rupees 10. Therefore, it comes to how much? 20 into 10, 200 rupees. Okay. Rupees 200 is the advance money received from one of the shareholders. Okay, fine. Here second call money comes to how much? Just you calculate. 4,000 shares are there, right? 4,000 shares into rupees 30. Into rupees 30. This has included even these 20 shares. Okay, that you keep in mind. It comes to how much? Rupees 1,20,000. Just check it. 000. Okay, 1,20,000 is the second call money. Rupees 30 per share on 4,000 shares. If we calculate, it comes to rupees 1,20,000. But here company has received excess money of rupees 200. He has not only paid rupees 30 per share, but also he has sent rupees 200. That is the excess amount as the final call money. Therefore, how much amount was collected by the company? Company collected 1,20,200 rupees. How much? 1,20,200 rupees was collected by the company. Why? Because one of the shareholders has paid the amount in advance. I told you that whenever calls in advance is given, calls in advance account shows credit balance. Okay, fine. Now we'll pass the entry when the second call money collected by the company, bank account is to be debited. How much amount is collected by the company here? 1,20,000, 1,20,200 rupees. But actual amount expected by the company was how much? 1,20,000. Then what is to be done with this rupees 200? This rupees 200 will be adjusted by the company when it makes the final call. That we have to remember. Okay, bank account is to be debited. Next one is to share second call account. Share second call account. What is the amount? 1,20,000. Only 1,20,000 it comes. Remaining amount we have to show as calls in advance account. Calls in advance account. Rupees how much? Rupees 200. Here you write being second call money and advance money on final call received. Next entry is transfer the amount to share capital. In that case, what journal entry is to be passed here? Share second call account is to be debited. Share second call account is to be debited with the amount of rupees how much? 1,20,000 only. Next one is to share capital account. To share capital account rupees 1,20,000. Being share second call money transferred. Okay, transferred to, or share call is transferred to share capital account. Or you can also simply write being share second call amount due. Next one is come to the 10th journal entry with regard to the final call. Final call is how much? Rupees 10 per share. Therefore, 10 per share means how many shares are issued? 4,000 shares are issued by the company. Therefore, it comes to rupees 40,000. 4,000 shares into rupees 10, it comes to 40,000. Company's plan was to collect how much? 40,000. But with regard to this, one adjustment is there in the problem. Information is there. All the call money was received, but not the final call on 40 shares. On 40 shares, call money was not collected. Assume that one of the shareholders is holding 40 shares. He has not paid due to one or the other reasons the call money to the company. How many shares he is holding? 40 shares. On 40 shares, how much it comes? On 40 shares, final call money is rupees 10 per share. Therefore, it comes to rupees how much? 400. Company's expectation was to collect rupees 40,000, but one of the shareholder had not paid rupees 400. Assume like this, it comes to rupees how much? 39,600. Company has collected only rupees 39,600 from the shareholders. Therefore, here rupees 400 which is not paid yet by the shareholders is called as calls in arrears. For that, what we need to do, we have to pass the entry. Whenever the final call money is received, what journal entry do you pass? Bank account is to be debited. How much call money is received? One more important thing you understand here. 39,600 is the amount which is to be collected now. Okay, some of the shareholders have not paid rupees 400, therefore that amount is deducted. 39,600 is the amount which is to be collected by the company on final call. Now you see, when the second call was made, that time one of the shareholders paid rupees 200. Already he has paid how much? Rupees 200. It means company collects only how much? 39,400 now, and 200 is already there with the company. Therefore, this rupees 200 is to be adjusted. Okay, fine. Now, bank account is to be debited. How much? 39,400. Try to understand here. 39,400 is the amount which the company is going to collect, and 200 is already received in advance from one of the shareholders. That will be adjusted now. Here you write calls in advance account is to be debited with the amount of rupees 200. Now you see here calls in advance account is credited here, and here that is debited. Therefore, this account gets adjusted. This account gets closed. Calls in arrears account. Calls in arrears account is also debited. What is the amount here? Rupees, how much? Rupees 400. This 400 is to be written here. Next to share third and final call. Third and final call account. Rupees how much? You make the total, it comes to rupees 40,000. Being share third and final call money received and calls in advance and calls in arrears adjusted. This is very interesting entry. Try to understand. Very simple thing is there. Then after that, whatever the share third and final call money is there, that we transfer to share capital account. That is why you write here share third and final call account is to be debited with the amount of rupees 40,000 to share capital account. To share capital account rupees 40,000 being share third and final call transfer to account balance, transfer to share capital account, or simply you can write being final call money due. Simple thing. Being final call money due rupees 40,000 and 40,000. Here just you see rupees 400 is the arrears. This amount may be collected in future. See, this is very interesting entry. Try to understand this one. Here calls in arrears is given rupees 400. Whenever the calls in arrears is collected by the company in future, company will pass one more entry, that is a bank account to calls in arrears account, and this calls in arrears account gets closed. This is the way how we pass the entry. I hope you understood the concept of calls in arrears and calls in advance, and also the journal entries pertaining to calls in advance and calls in arrears. If any doubt is there, you can also send the comment, and better you share this video to your friends so that they can also get the benefit of this. Okay, thank you.